weekly trend, we use the 9-day moving average as the basic algorithm for the weekly trend. The weekly momentum indicator, with the market closing below the VC weekly price momentum indicator of 1170, it confirms that the price momentum came in bearish also. But it also tells you that a close above 1170 weekly would trigger weekly stops and negate the bearish signal to neutral. Closing above 1170 on a second close would activate the uptrend. And if that trend is activated, we're trading right now at 1172.60, up $9.10. The chart that you see here is basically the daily algorithms that we use. And we try to find the harmonic timing between the daily algorithms and the weekly algorithms that you see here we posted on this report. And coming into this week, as of Friday of last week, we basically maintained a long position coming into this week, and it gave us the targets on Sunday night to activate some profits for us, which we have taken on swing trade positions that we kept open for a couple of days. And you see here in silver base, we liquidated 3 contracts out of 5 swing trades that we kept open, and we are still holding 2 contracts for a profit for the day of 5,075. The way we do it is you have access to these algorithms every day by 7 o'clock Pacific Standard Time. And when you come into the room here, these are the algorithms that we post here in the room. You can see that this was actually the last time that we posted the algorithms was on July the 2nd. Friday was a holiday, so we don't use data for slow volume, low holiday volume, early closing holiday trading. The algorithms told us that as we came in Monday, look to take profits in gold at 1171 to 1176. Or you buy it at 1158 to 1150. And the market jumped on the Monday the 6th into the 1171 target area, with making a high of 1174.40 today. So if you had a long position, you can use these algorithms to lock in profits, as we have, and be able to maintain a position, a swing trade position open, using the weekly algorithms that very specifically tell you the different levels that you can activate your profit objectives, as well as your stops. The logic behind these algorithms is a very basic logic that if you want additional information, you can go to education and you can click on the trading guidelines, and the trading guidelines give you a very clear picture of how to deploy the algorithm. It starts from a weight position. When the price comes down into any of the levels, it activates a neutral position. And using the 15-minute bar, if it closes above it, it's a long position. When the target is met, it'll go back to a neutral position or a wait. The same thing if the market closes below any of the levels, it activates a short signal. Automatically, your stop is above, the level above, and the target is the levels below. Sell buy one or buy two levels. When you either get stopped out or liquidate your position at a profit, you go back to neutral. And this is the basic logic that we follow. And I give you guidelines here that for conservative traders, which most of the time I use this strategy, I wait for the market to close after the setup is in place. The first thing I do is wait about 30 minutes in ETFs. 6:30 the market opens. We open the room at 7 o'clock. The gold market opens at 5:30 Pacific time. We open the room at 7 o'clock. So we allow plenty of time for the chatter to settle down. And once the chatter settles down and the price crosses any of the levels, then it activates for us a setup. And it tells us a close above on the next 15-minute bar is a buy signal. When the signal is activated, your stop is the code below right away, and your targets are the levels above. If you do multiple positions, you can use the different levels, the different target levels to lock in the profit. You can see here in the silver market, the signal traded precisely the way that it's supposed to, and we waited until the market got up to the sell 2 level before we activated some profits. We did this on a swing trade position, and we also did that on a day trade position, as you can see here, making $500 on a swing on a day trade position, and on a swing trade position that we've been holding, we pulled out so far about $5,000. We still have 2 positions open with targets that are indicating on the weekly report to be in the 1598 area, as very clearly defined in the report. 1598 is the sell 1 level for silver, and 1631 is the second level, as indicated very clearly and posted on Saturday. The close about 1571 is activating a additional confirmation and basically triggering the targets of 1598 to 1631. So we wait for clear criteria. When the signal is activated, it tells us right away where the stop and the targets are. You can use a couple of stop choices that you have. We use an SEO, which is stop close only, which means basically the market will close below the level very close to the signal. That's stop close only. Market on the close is that we will wait for the end of the day, the closing price for the end of the day. And always, if you want to have a third backup stop, use a hard dollar stop for the size of your account. We suggest that on a full-size contract that you use a $500 stop. So you can take the time out and read the guidelines. You can see how the signals are activated by basically following this very basic, simple logic, starting from a neutral zone that activates a setup. Then it tells you the close of the next 15-minute bar above, you buy long, or the close below, you go short. And immediately it activates your stop above or below levels with your targets in place already above or below the market. So we apply this information in the gold, silver markets, the crude oil markets, the Russell 2000 And we are applying the same intelligence and the algorithms as well in terms of managing risk in instruments like JNUG, basically, or other inversed ETFs that we use. Um, and so the reason why we do that is because it's very difficult to manage the risk of a futures position with unlimited margin overnight. So we're using the ETFs, JNUG, which is an aggressive inverse triple X ETF, to position ourselves in order to hold on to a trade that we want to hold on as a position trade, as opposed to holding on to a futures position with unlimited risk. And we're finding that the application of the algorithms is pretty much as accurate in applying this information as well for using in the ETFs or stocks or any other financial instrument. I hope that I've been able to clarify some of the questions that will present themselves to you and give you a very clear picture of the way that we follow our own algorithms and the way that we trade our own algorithms. If you would like any additional information, please don't hesitate. You're welcome to give me a call. My direct line is 877-733-1511. My direct line is 805 area code 418-1744. Or you can email me at support@ema2trade.com. It's been a pleasure to share this time with you and direct you on how you can deploy and apply this incredible intelligence tool for the benefit of your own trading account. This is Patrick MontesDeOca. Until next time, my friend, good trading and be well.